Let's do November's dividend stocks. Now, I've been trying to change up the way I do these best dividend stocks for each month because I feel like sometimes they might get a little bit repetitive. In August and September, I used the ASX 100 and did my basic core research on those companies. Last month, October, I took the list from marketindex.com.au because they have a popular page called High Dividend Yields where they list companies over 5% dividend yield, which is the first of my criteria. I just wanted to see if I would get different companies, but interestingly enough, I actually got quite similar companies to the previous 2 months, probably because my core research doesn't change all that much. Typically, I stick to dividend yields of 5% or more. I also want strong dividend stability. I want the dividends to be consistent over time and preferably growing, but I also want a company with good, strong growth potential as well. Generally, I won't invest in a company under 1 billion capitalization, mostly because I find that those smaller companies can be hard to get in and out of. The liquidity just isn't there. So that's usually why I stick to the ASX 200. The companies are just so much larger. There's a lot more investors, so there's a lot more liquidity. You can get in and out if you have to. Not that you need to, like I am a long-term investor, but I just like having that liquidity. And of course, investing in companies that are much larger usually means that they're usually more established. Not always, but usually. So I had to think with November, did I want to do the same thing or did I want to try something different? Someone suggested in the comments that I only stick to companies that have upcoming dividends, so dividends that are coming in November and December, so that you can buy them quickly and get the dividend coming up. But I actually had a look, and the companies that are actually paying out in November, the ex-dividend date has already passed, and those paying out in December, there's actually not a lot paying out in December. Some of the banks are, but not a lot of companies are. I just don't think Australia is big enough to be able to each month, if I'm doing one of these dividend videos, is to only choose those companies that have upcoming dividends. In the end, I thought we'll just do the core research on the ASX 100 again, and then next month we'll go to the ASX 200 just to see if there's any difference. So let's get into the steps. So step one is just getting a list of companies within the ASX 100. Since I already have it from previous research, I'm just going to use that list to save some time. Step two is getting the yields, of course. I sorted the last list from highest dividends to lowest. I'll go in and get the updated yields, but probably not for every company. I mean, yields don't change that dramatically in a short space of time, so I don't think I'll need to do every single company again, so I'll just stick with those that were high last time. They'll probably still be similar. Okay, I ended up getting them all. I was on a roll. Step three is sorting by dividend yield, and I eliminate those with the less than the yield that I desire. So in this case, I'm going to eliminate anything less than 5%. Now, of course, we don't stop here. Of course, we want a good dividend yield, but that is not the most important thing. We also want stability. So step four, next you need to make sure that those dividends are nice and stable and preferably growing. So I used to look at the dividend stability figure to determine this, but now I just prefer to see previous dividend payouts, mostly because not many places show that dividend stability figure, so a few people were getting confused about where to find it. It is in CommSec, but not many other places. So let's just make it simple and just look at the past payments to see whether they're consistent or not. Now, CommSec shows this in a graph form, which I like. It's just easy and nice visual data, but you can also get similar data at marketindex.com.au. Again, not affiliated. I just use that for research sometimes. So step five, we don't only want good dividends, we want a company that's growing also. So the next thing I look at is how much it has increased over the past 5 years. So that should eliminate those companies that might pay okay with dividends, but aren't growing over time. If we can get both, let's take both. So that brings our core list down to 6 companies. So the step 6, the last thing I look for, which is optional for many people, it's just how much debt that company is carrying. So I personally prefer companies that have a debt to equity figure of less than 80%. That's a personal preference. While a company that's borrowing money to expand isn't inherently bad, they might be borrowing for expansion or more materials for future product increases. If you were investing for the dividend and the company gets into financial trouble, the first thing that the company usually will do to cover any loan payments is to hold on to their cash and cut the dividend. So it's the safest thing for a company to do in short-term situations like this, like last year. But as a dividend investor, it's not so great for me if they do cut the dividend for that reason. So I went through and none of the companies in this list had a debt to equity higher than 80%. They all had pretty good debt to equity. They're all fine. So that's our list for November. Lots of repeats again, of course, as expected. Really, financials don't change that much month to month, which is a good thing. I will expand it to the ASX 200 next month so that not all of the companies are materials heavy like they are this month. But from our list, we have Mineral Resources, Fortescue Metals, JB Hi-Fi, Rio Tinto, the Magellan Financial Group, and BHP. So those are all the companies from the ASX 100 that fit my criteria when I'm looking for dividend-paying companies. I hope you enjoyed this video. Take care, and I'll see you in the next video. Bye. How yum does that drink look? I totally want to drink it right now.